Everyone, this is Rob McDougall with Zhang Financial. This is your weekly economic update. Today is Monday, April 6, 2026. So, economic activity released last week, surprisingly strong, almost across the board. So, of course, there's a lot of concern over the economy, particularly inflation, Iran war, get it. But the numbers that came through last week were pretty impressive. So we'll start with the JOLTS job opening. That was on Tuesday. It came in a little better than expected. Not a big deal, but it was positive. The job openings number was higher than expected. Then on Wednesday, we got the ADP job number. That was better than expected. Expectations were 42,000 new jobs, came in at 62,000. Same day, retail sales month over month came in at 0.6% month over month and was expected to come in at 0.4, so that was positive. ISM manufacturing index that was expected to come in at 52.3 came in at 52.7. So all those data points good. Initial jobless claims on Thursday, again, we've mentioned this many times, but over the last 3 months, the pattern is pretty clear. Expectations are for larger job cuts. The consensus estimates have systematically been too high. So for this week, expectation was 215,000 new jobless claims, came in at 202,000. Then on Friday, non-farm payroll. This was just stunning. So last month we had a really bad number, unexpected clearly. This was the reverse. So non-farm payroll expectation, 48,000 new jobs for the month of March, came in at 178,000. Unemployment rate expected to be 4.4, came in at 4.3. These are all good numbers. Now, average hourly earnings, a little worse than expected. Expected to come in at a positive 0.3 month over month. Came in at 0.2, but then spending was good. So these numbers just almost across the board, very positive. Inflation expectations last week. We'll talk a little bit about inflation because during this week, we're going to have both PCE and CPI released. But the inflation expectations, which had dropped last week, they were a little elevated last week. Went from 2.31% expected for the next 10 years to 2.34%. But again, not terrible, particularly since the inflation that we're expecting to see in the short term is going to be quite considerably higher than that. Also last week, the Federal Reserve Atlanta, their expectation for first quarter GDP growth, 1.6%. They were over 3% just 3 weeks ago. They've systematically been bringing that down, expectation. So 1.6 is the expectation. Just a week ago, it was 2.0. In terms of what we can expect for interest rate cuts, we do have a Fed meeting the month of April. No expectation whatsoever of any movement, rate hike, rate cut. But by the end of the year, this is pretty interesting. The expectation, and this is largely because of the gas price elevation at this point, but now the odds by the end of this year, December, of no rate cuts at all is 70%. There's only a 19% probability built into the futures market that will get one cut and less than 1% that will get two cuts. Now, we mentioned coming into this year, Federal Reserve was saying you could expect two. The market had priced in three. That market has completely backed off that. So now the expectation really is, the consensus is, no rate hikes this year. So how did the market respond to all this news last week? It was good. S&P 500 it broke a streak. I believe it was 4 weekly losses in a row. Broke that, positive 1.65% for the week. Mag 7 came back, up about 2.2%. However, year to date down 11.5%. Nonetheless, gains last week really driven by the Mag 7, growth stocks, and large cap stocks. In terms of international, it was a good week for emerging market, developed market ex-US, up 2.1%, but in a pattern we haven't seen much lately. Emerging markets, the worst performing. They were down 0.9%. So on a year-to-date basis, the S&P 500 now is down 3.5%. Developed markets ex-US up 1.5%, so 5% better. In emerging markets, year-to-date basis, positive 2.5%. Fixed income last week did catch a bid, got a rally. 2-year yield changes were down 12 basis points. The 10-year was down 13. So we had the Bloomberg U.S. Aggregate Bond Index up nearly 1%. It was up 0.93%. So economic activity this week, this is a big calendar. So today we'll have ISM Services PMI, came in the month of February at 56.1. It's expected to be a little bit weaker, not a big deal, but at 55. On Thursday starts the inflation number. So we'll get PCE, personal income, personal spending. The core PCE is expected month over month, and remember this number, at 0.4%. Now, that's the core number. When we take a look at PCI, we're going to see headline and core. Core eliminates the impact from energy, so there's a huge divergence there. So core PCE for the month of February expected, this is before all the gas price hikes, 0.4%. Personal income is expected to be up 0.3%, a little less than we saw in January of 0.4%. And personal spending is expected to actually be a little higher at 0.5 versus 0.4 for the month of January. Now, initial jobless claims, looks like the consensus is starting to catch up to the pattern we've been seeing. Again, last week we had 202,000 new claims. The expectation for this week is 200,000. Now, Friday, we'll see the rest of the inflation number, CPI numbers. Those numbers are considerably higher. Certainly, the headline number, the core numbers, pretty close, actually a little bit better. But the headline number is expected to be up year over year, 2.4%. But month over month, a positive 0.9% for the month of March. Month of February, that was only 0.3%. So just at the beginning of the beginning stages of seeing the flow through of the energy prices, which have increased dramatically. Lastly, we also get the Michigan Consumer Sentiment number. We don't put much stock in it. It seems to go down virtually every month. It is expected to be lower than it was. So this is for April. The month of March, it was at 53.3, and expectation is it will come in at 52.5. So that's it for our Economic Weekly Recap. Thank you very much for attending. We'll look forward to seeing you next week. Thank you.